We welcome in Rebecca Walser's here, president of Walser Wealth Management. Thank you for being
Thanks
here.
for having me, Nicole.
You know, the last few times you've been here, you've been talking about the doom and gloom. Mark Faberish. Tell me a little bit. You still on that? Still on the 30% sell-off? Well, you're getting some of it.
I know. It's so funny because I was just looking at the beginning of December, the S&P was up over 29% for the year to date, Nicole, and now we're down to only just up 23% for the year. So still, the market has done extremely well this year, but we are seeing a pullback. We are normally getting a Santa Claus rally in the last 2 trading weeks of the year. We haven't seen that. In fact, we've seen the opposite, and it's a massive combination of factors. Obviously, the Fed set the tone for more hawkishness on Wednesday, and the market really did not like the estimate, the forecast of only 2 rate cuts. And I have an issue with that because if the Fed has been telling us all year long with the BLS numbers and all the economic indicators that, hey, everything's fine, even though I've been saying, no, the Somme rule's been triggered, there's been economic things happening. If they're saying everything's fine, why is this Wall Street still expecting such accommodative Fed policy? Like, why would we cut rates aggressively if things are fine? We have to save the dry powder, just like when we're saving dry powder for investments. We have to save the dry powder for the really big problems. Now, yes, we have the debt ceiling issue that's also an issue that's also causing the markets to be a little bit erratic, but the fact is that we are due for a global slowdown, even though there's a lot of Trump, positivity of the coming M&A even is going to go up.
Right, and you make the point. There are policies that people in business really like that Trump is bringing, less regulation and lower taxes and things like that to really boost the economy, right? Made in America, etc. So how do you go about a portfolio? Are you taking profits here now?
Well, I think for sure you could have, if you were in commodities, if you were in AI space and you saw, hey, I want to maybe have a little bit of dry powder, I'm going to take some profits now and kind of, I think this is going to be the beginning of the volatility. We're going to see it. It's really, I have this feeling, Nicole, and I know that you understand what I'm about to say, but when you have an administration that the powers that be, economic powers that be, really want to support that administration continuing, and then you have a new administration, it's really interesting how the economic data all of a sudden becomes very stark and very dire and very crass and black and white. And so I'm sort of expecting a lot to get thrown at Trump in the very, very beginning of his administration, and it was going to be an impact.
Yeah. I mean, at some point, you get back in. There's so much money on the sidelines.
You have to, absolutely.
There's so much money on the sidelines, and people have been going to private equity because of the rate environment. Money's got to get put to work. And people love to do that. They want to make more money.
Absolutely.
So what do you tell them to do? How do you do this in 25 and 26 even?
I do think that we're going to have quite a bit of spike in volatility around the inauguration in January. So right now, our guidance is really through February. We're still very cautious through February. And then we're going to really be able to assess once the inauguration happens and once he's in there. And we're starting to get economic data where the market is going to go with the trajectory. So everyone is saying like S&P 7,000 next year. I say not a chance and not a chance. Not a chance.
Way, huh?
No way.
I certainly saw some 6,500s. 6,100 even feels far away right now, doesn't it?
It does.
You called that we would have a pullback, but you're waiting for a lot more.
Yeah.
The Fed saying now they're going to do 2 cuts instead of 4 cuts. They're back to the inflation talk because it's inflation and labor. There was a time they got off inflation. They were focused on labor. They're back to the inflation. Do you think that what's going to drive inflation? Are they worried about the tariffs or just uncertainty?
Look at the PCE data we got today. Like, I know the Fed wants to say it's their preferred gauge, but everything is based off of CPI. All adjustments for government spending, everything is based off of CPI. CPI is still sticky at 2.7 year over year, Nicole. So whether the PCE is saying it's 2 point whatever, the CPI is sticky. And so when you have inflation, and you've got, no offense to President Trump, but he's already calling for the debt ceiling to be eliminated. The debt ceiling was implemented in 1917 to prevent the amount of debt we issue to pay current bills. There's a reason for the debt ceiling. There's a reason we have $35 trillion of debt, a $7 trillion proposed budget, and only less than $5 trillion of taxes that we collect every year. This is a massive fiscal and monetary problem that the United States has got to get corrected. Right now, while the world is talking de-dollarization, we have to have the dollar be strong.
Yeah, and look, we do have a strong dollar. There's been talk too about small caps, and that those could fare pretty well in 2025. What do you think about that group?
I think if you have a capital environment that will really give you upfront ability to get get in at a discount, Absolutely yes. But if we still have the cost of capital as high as it is, I think people are still going to give small caps a hard time.
You know, when we look at the PCE data, at least that came in light. You know, it didn't worry anybody today. And now for the rest of the year, I mean, do you expect a Santa Claus rally? Because first of all, folks, I should note today is Triple Witch. We also have an S&P rebalance today. Every single booth here on Wall Street, all the brokers are in. All right, there's no holiday today. I mean, it's all hands on deck for this close. So, you know, in the early afternoon, 2 o'clock, 1, 2, 3 o'clock, you'll start to see those options expirations coupled with the rebalance, right?
Yeah, absolutely.
The heavy volume. It's that kind of day.
We normally get the Santa Claus rally these last 2 weeks of the trading year, but I think with the new administration coming in, with the debt ceiling situation that's happening right now, I mean, literally in Congress as we speak.
And that's the other thing. I mean, the government shut down. They're on Plan C. Mike Johnson's on Plan C.
Plan C. So a lot of things that are happening right now that I think don't expect us to have a normal Santa Claus rally now. But I've been the bear all year.
Rebecca on. Rebecca's always a pleasure to have
Calls
you
in
here.
the stockings this year, okay, people?
It's always a pleasure to have you here. Thank you, Rebecca.
Someday I'm going to be right. I'm kidding.
But we appreciate it. And look, it's nice to have your perspective. You've had many, many years on Wall Street. And so it's important to have obviously a diverse idea here. Thank you so much. Rebecca Walser of Walser Wealth Management.